All right, good morning, everybody. Thank you for tuning in to this week's Spiders Report. There's a lot to talk about this week, obviously, with the markets being down so much last week. So I expect a big rebound in imminent, uh, maybe the later half of this week, or if not next week. Monday is Christmas Eve, so the markets are closing early and the volume is going to be pretty thin. So I would kind of ignore whatever happens tomorrow. But I do believe that we're due for a sizable rebound, and the reason why is because the market is oversold. We'll see that from a weekly perspective. The S&P is the most oversold it's been in 7 years, and a lot of the sectors that we look at are at support levels. So that's kind of our mantra, as you know, because you listen to us. If not, you wouldn't be hearing my voice right now. Is when markets are oversold or overbought, and they get to important support or resistance level, respectively, they tend to revert. When markets get to these levels and then consolidate, then they tend to resume the trend and break through these levels. So if you want to make money in the markets, you really have to ignore stuff like Gann theory and harmonic charts because it's like UFOs and Bigfoot. I mean, it's fun to talk about, but it's not credible. And I can tell you that in my 20 years of being an institutional hedge fund trader, I've never seen a successful or unsuccessful manager, for that matter, talk about things such as Gann theory or Elliott wave. But if you can identify the trends and if you can identify the levels, you can develop a profitable trading strategy. So in financial markets, there are certain price levels that are more significant than others. And you'll just have to look at a chart to see that. Like we're going to look at the 260 level on the SPYs. And in markets, the prices are always doing one of three things: they're either going up, going down, or staying the same. So if you can understand these dynamics and be aware of them, you can develop a profitable trading strategy. And people have been saying, I get all these emails like, oh, great call last week, great call last week, great call, blah 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 blah. Well, I don't. The reason why I am successful at determining where the markets are going to go is because I don't. I let the markets tell me. I just look for the levels. I don't get married to an opinion. And I mean, I've been doing it for a long time and it works. So I suppose that's why you're listening to me, because you don't think I'm a complete idiot. Maybe somewhat of an idiot. All right, this is just an overview. You can um, you can print this out off my webpage. All right, so here's the SPYs year to date, and I put on my blog something along the lines of like this time it's different or whatever, and you could kind of see what I mean. This you can see what I mean, right? See, the S&P got down to this 260 level. This are the SPYs. The SPYs are the spider of the S&P 500. So sometimes I use them terms interchangeably. I'm sorry if that confuses you. I'll try to just stick with the SPYs. But you can see, all right, how many times was this 260 level tested this year? Okay. First time it was here. This is back in February. Here, here, and here. So what do we see with these things? They were all oversold. Okay. Oversold. You can see this momentum indicator, and you can see the Bollinger Bands. And when I talk about oversold, what I mean is, like, if you look at these two bands, okay, these are Bollinger Bands, and these mark standard deviations, and 95% of trading should be within two standard deviations of the norm, right? I think that's right. I have to look at Wikipedia. I didn't really pay attention in statistics class years ago. But anyway, this is a simple momentum indicator. You can see, all right, so we're here, oversold, we rebound, oversold, rebound, oversold, rebound, oversold, rebound. Guess what happens here, okay? We get to this level. It's kind of hard to look at because now we're oversold, but this is what I'm talking about in here. This is what I'm talking about here. So we get to this level, and instead of rebounding, the market's consolidated. And like I just said, typically when a market gets to an important level and it consolidates, then it tends to break through and resume its trend. So that's why support. It was not surprising that support was broken here, and that's what I've been talking about. So now the markets are very oversold again. And this is one of the main things that makes me think we're going to have a big rally this week. Imminent. I would say it's imminent. Imminent? Yeah, imminent. This is the SPYs going back to 2014. Yeah, 2014. And you can see here, now this is a weekly chart. You see here how we're oversold, right? When this indicator gets below this line, it's oversold. Now, you can see it didn't get there. Going back to September of 2011, this is the most oversold that the SPYs have been. So that's what, 7 years? So because of that, I'm expecting that's one of the reasons why I'm expecting a significant tradable rebound this week. Now, it doesn't mean I'm turning bullish long term. I think that there's a chance the markets rebound, hit resistance, and then go even lower. But I'm talking about month or two down the road. I'm looking for the short-term bounce now. So we're going to look at the support levels we're testing, and we're going to look at the resistance levels that they're going to be hitting if they rebound. Clearly, you can see here, obviously, based on the discussion we just had, if these things rebound significantly, we're going to hit resistance at the 260 level. All right, here's the tech sector. And as you know, I have a hard time calling this, so I don't trade these because they're just too volatile. But one of the things I'm seeing is, we're very oversold. We have big volume. I mean, there was big volume here too. But anyway, it's oversold, big volume. If this rebounds, I'm looking for resistance around 63.50. This is one of the levels, or one of the sectors that's testing a level, which I mentioned. All right, now this is the financial sector, and you can see here how we're testing 23. I don't know what the exact close was. I think it was like 22.87 or something like that. You can see that this was the bottom through the first half of 2017. So therefore, because it's oversold and because we're trading at an important level, I would expect a rebound. I would be looking for resistance around the 25 level, because that's was the top back here, and it was a low here. Okay, so XLF's testing the 23 level, which was support in 2017, and they're oversold. So looking for a rebound. Here is the healthcare sector. All right, now we can see this sector as well is testing a level, right? It's testing 82.50. I'm not sure exactly where it closed, but somewhere around there. And the reason why I don't know exactly where these things are is because I just don't watch them too much, and you shouldn't either. Figure out where your levels are, figure out what trades you want to do, and then go for a walk in the park or go to the beach or read a book. Don't pay attention to these idiots on television because they'll just drive you crazy. So anyway, you can see in May and June, 82.50 is right where the bottom was, and that's the level that's being tested. Again, we're very oversold. Expect a rebound. I would be looking for resistance around this 85.50 level. It was the top here. It was resistance here and where this rally got launched from, and it was the low here back in October. Okay, now you can see another level here. And I got to tell you, it's very rare to go through these sectors and see such clear levels being tested. And that's another reason why I expect a big rally Christmas is what, Tuesday? So, Wednesday, Thursday, Friday, or early next week, I believe we're going to see a big tradable bounce. So we can look at these discretionary spiders, and You can see that they're testing this 92.25 level. You can see 92.25 was the top from May through November of 2017. So what was resistance becomes support, oversold. So once again, oversold at support, I would expect a bounce. Now, if we go like this and consolidate and trade sideways, and then this comes back up here, and we're not overbought, then that's when you look for the breakthrough or the breakdown in this case. But like I said, very, very, very oversold at support or at a level that should provide support. So I'm expecting a rebound here. Okay, and here's industrials. Now this is kind of an interesting dynamic, which you probably wouldn't understand unless you were a seasoned trader who's been doing this for longer than they care to admit, like myself. So you can see the 62 level is being tested, right? And 62 was support back here, and it doesn't look like it was support for that long, but here's the interesting dynamic here. This is where this rally launched from. Okay, this is like the election, the Donald Trump cut taxes election, the Obama regulations got cut away, so forth and so on. So levels which rallies start from or sell-offs start from tend to be important when the markets revert and get back to them, as is the case here. So oversold at an important level. I'm expecting a rebound. I mean, there doesn't seem to be any real resistance until the 71 level. There's probably going to be some here around 68. So I'm going to be looking for a resistance around 68. Now this is really interesting. This is the consumer staples spider, and I always talk about this 50 level because it's so important. So again, oversold. I sound like a broken record, right? Oversold at support. This 50 level is historically important. You can see it was the top throughout May, right? So we're oversold. We're testing this level. If we rebound, I'm going to be looking for a resistance around 52, and that's only a 4% move. Yeah, consider the sell-off we've had. That's not much. But let's take a look at this longer-term chart. And then again, this is one of the main reasons why I think we're going to see a rebound this week. This 50 level is very important. It was the top throughout 2015. It was the low here, an important low in September of 16. This is what we just looked at on the shorter term chart here. So anyway, we're testing this. So again, repeat it with me. Oversold at support, expect a bounce. Energy, this is the XLFs. So you can see what I think is going to be some capitulation volume. I mean, this thing averages, I don't know, 25 million shares a day. And last week, I mean, this is a 40 million share day, 38 million share day. So this is what I would consider a capitulation volume, which means people are just kind of throwing in the towel and saying, just sell it, get me out at any price. So I think we're going to see a rebound here, and in the next chart, you'll see that it's at an interesting support level too. So here's the downtrend line. If you want to go long, you may want to wait till this is broken. And let's see. So we're trading around 56, and I don't really see any resistance until we get up here. So this could be a good move because it went down so fast. And when things go down really fast, they tend to rebound and go up really fast and fill the pocket, so to speak, because things need to spend time at certain levels so people get a vested interest, right? In other words, support becomes resistance and resistance becomes support. There wasn't too much support on this thing, just gapped right down. So there probably won't be too much resistance on the way up because theoretically support comes from someone who says, all right, well, I bought it at 62. Now I'm underwater. If it gets back to 62, I'm going to sell it and get out at break even, right? I'm sure you've done that. Everyone's done that. But that's why levels form, right? And because this was such a quick sell-off, I think we could see a quick rebound. I mean, you can see here, the 66.50 level was support for months. That's why it was support over here. This little area here just blasted right up So therefore, it just blasted right down here because we didn't get that much vested interest here. So it's not that much vested interest here on the way down. Now let's take a look at this XLE's long term. And again, this is a weekly chart. You can see it's choppy, but this is pretty much where the market turned in early 2016, late 2015. This line's the 55 level, so we can see we're trading right around there. Very oversold. So again, oversold, that's support. If we rebound, yeah, I don't know. I mean, what did I say on the last slide? 62-ish. So I'd be looking for resistance there. All right, everyone knows I hate the material sector because it's so boring. But anyway, I'm seeing some big capitulation volume here. And I mean, we had big volume here, and see we got a rebound. And we had this big volume here, and we had a rebound. But like everyone knows, I don't trade these things because there's just not enough action in them. And then action, that brings us to our utility sector. And we can see the recent uptrend's been broken. And now we're in a downtrend. And that makes sense because it's a flight to safety. If we head lower, I'm going to be looking for support around 52. That's where the recent bottoms were here in September and back here in July. So that's it, everybody. Thank you for tuning in. I hope everyone has a Merry Christmas and Happy Holidays to all my Mensch friends that are Jewish out there. And like I said, I'm expecting a big bounce. I don't know if we're going to see it tomorrow. Tomorrow's Christmas Eve. The market's going to be closing early and there's not going to be that much volume. But going into the new year, I expect some kind of a tradable rally. And then I would suspect that we're going to get up to these support level. I mean, sorry, these resistance levels I mentioned. And then longer term is much harder to call. But I think longer term, we're probably eventually going to be lower than we are now because so much of it has to do with this interest rate stuff. And interest rates were artificially held low for too long. And I mean, markets go down as well as up. It's nothing historically for a market to give back 50% of its gains. So we're 50% of the gains of the rally. So by those metrics, we could go significantly lower in the intermediate to long term, but short term, we're going to go higher. So that's it. Thanks everybody for tuning in. I'll talk to you next week.